Assalamualaikum everyone. Alhamdulillahi Rabbil Alamin. Assalatu wassalamu ala Rasulillah. So the question now is, why is the bank ROE were found much higher than the PSIA rate of return? So we can see that given in this table that the return on equity is very much higher compared with the PSIA rate of return. And we know very well that, for example, in the year 2000, the average ROE of Malaysian banks, Islamic bank, was at 20.4. So for every $1 of tier 1 capital, the return is 20.4 cents. That was in year 2000. 2008, we have a lower ROE, presumably due to the global financial crisis. We see that the ROE was at 12.4%, which means that for every $1 of equity investment, the bank were able to generate 12.4 cents. Still, it was much higher compared with the PSIA rate of return that essentially averaged around 3%. And this is something that we need to further investigate and to see why is it that the bank who is operating as a mudarib is getting much higher. And we can see that the banking capital is invested in the safe asset like government treasury for liquidity purposes. The capital fund were commingled with the PSIA fund, but then the capital fund were not invested in the retail asset. They were put into the lower yield but safer government securities. The earning, however, is essentially reflecting the profit coming from banking operation, which means that it is where the risk faced by the bank, namely credit, market, and operational, were compensated with a higher return. But we can see that the bank is running the show as a mudarib. And why is it that the mudarib is claiming a risk premium? What is the so-called capital that the mudarib is injecting that warrant it to claim a return which is much exceeding the PSIA rate of return? So let us see here that the data we showed earlier have evidence that the ROE, return on equity, has been higher than the PSIA rate of return. I would say that this would be an acceptable event when the non-PSIA funds that is allocated into banking asset are much higher than the PSIA fund. So meaning that when the bank uses non-PSIA fund or non-equity fund, which was essentially deposit, then we say that the bank, when the bank uses deposit fund to make murabahah or to make tawarruk or to make ITAP, then the risk associated with this asset will be borne by the bank. The credit, the market, and the operational risk will be carried by the bank, and that will be in the respective risk-weighted asset that represents credit risk, market risk, and operational risk. So meaning that when bank uses deposit fund to make the murabahah, to make the tawarruk, to make ITAP, then we can say bank carries the credit market and operational risk in the asset funded by that deposit fund. May it be a qardu, or may it be wadi'ah, damanah, or even tawarruk. By bearing this risk, bank will claim a risk premium in the form of high ROE, because bank is putting its own capital against the risky asset by virtue of the capital adequacy requirement as required by the regulator. Right? So when bank uses deposit fund or leverage fund, then they have to put their own money against the risky asset funded by this deposit fund. Right? Then we will say that due to that risk faced by the bank, then it justifies that the bank will claim a risk premium for the risk taken over the exposure. However, when the PSIA funds are found to be higher than the non-PSIA fund, so if the PSIA fund are much higher than the deposit fund, then we will say that the PSIA account holder should be getting higher return relative to the bank as a mudarib. So the PSIA ROR should be higher than the ROE, since it is the PSIA holders that were taking the risk, that were basically absorbing the credit market and operational risk instead of the bank. Right? So the PSIA fund will be absorbing this financial risk rather than the bank, and therefore they should be compensated for the risk taken, as we know that there is no guarantee accorded to the PSIA fund, no guarantee on any form of return. So it is essentially based on the mudarabah contract. The PSIA is an equity fund, which is much different from the qardu or wadi'ah damanah or tawarruk deposit that guarantees the placement plus the return. So, however, we do not have the data right now. If we are able to essentially show the distribution of the non-PSIA fund and the PSIA fund itself, then we should be able to explain or even justify that if we find that the non-PSIA fund is much higher than the PSIA fund, then it implies that the ROE should be much higher than the PSIA ROR, because the bank is putting their capital against the asset risk. So this is essentially my observation, and we have quite a lot of work to do to essentially see the proportion of deposit fund over the amount of PSIA fund available in the funding system of the Islamic bank. Okay guys, I'll see you again in the next presentation. Thank you for your time. Assalamualaikum warahmatullahi wabarakatuh.